I think in short, commodities are increasing in price right now. Oil, wheat, soybeans, natural gas, all of those have surged in the past 12 months. At the end of the day, the issue is most things you can buy are currency derivatives, and currency derivatives are correlated to the strength of the currency. All currencies are collapsing. International currencies much faster than the United States dollar, but the United States dollar is also collapsing.
Welcome to Dream Richer. Our economy has never been at the stage we are currently in now. As Saylor argues, we have reached a point in the economy, which you would classify as stagflation. Stagflation basically means a stagnant economy where the inflation and unemployment are high. Introduced during the weak economy of the 1917s, stagflation is connected to the macroeconomic model of supply and demand. Stagflation often results from an external factor that drives prices upward. For example, during the 1970s, the United States experienced stagflation due to several factors, one of which was the Vietnam War. The war led to a number of debts that forced the economy to go off the gold standard. More importantly, conflicts over the war between Israel and Arab nations led oil-producing states to stop shipping oil to the United States. Without Arab oil, the price for oil in the United States skyrocketed, increasing all other prices as a result. We are seeing the same happening in current times, with ongoing threats of war, food shortage, and increasing inflation. By the end of this video, Saylor argues where he recommends putting your money if you want to stay safe. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
I think we're living in a very uncertain world right now, and there's a lot of political uncertainty with regard to politics, trade policy, labor policy, manufacturing policy. So if you're considering investing in a company, the question you have to struggle with is, will the company be impacted by tariffs or trade policy or tax policy or labor policy or manufacturing policy or a war or a famine? And so that's the first uncertainty. The second uncertainty we have today is monetary uncertainty. We see a lot of countries with their currencies collapsing. In Argentina, they just implemented some capital controls limiting the amount of US dollars that companies are allowed to hold. In Zimbabwe, they're dollarizing. Their currency has literally collapsed to nothing. And so if you're holding a currency or you're holding a company or a bond that generates cash flows in anything other than the dollar, you have a massive amount of uncertainty and risk. If we look at the last 12 months, the euro has weakened against the dollar, the pound has weakened against the dollar, the yen has weakened against the dollar, the Turkish lira has weakened against the dollar. In fact, just about every currency in the world is collapsing against the dollar. We call the two things together stagflation. You've got a stagnating economy, you've got an inflating money supply, which means that your currencies are buying less. So if you're any individual and you're looking out over the course of a decade, and you have any capital that you wish to preserve, or you're generating cash flow from your job, the question is, what do you do to insulate yourself from stagflation? Banks are freezing people's funds everywhere in the world right now. In the US, perhaps your funds won't be frozen, you'll just have the currency collapse. So there's a risk with currencies, there's the obvious risk with bonds, there's a risk with stocks, and that takes you to property and collectibles. So maybe you collect Rolexes. A lot of people are doing that. You can see what people are doing in this macroeconomic environment. They're buying watches. They're buying luxury cars. They're buying real estate. If you look over the past 2 years, the money supply expanded by 40%. Single family homes in the US increased in price by 40%. So it looks in the near term, over 2 years, like single family homes are a pretty good inflation hedge. Bitcoin's performed better than single family homes in that time frame. But now we're stuck with this issue of, well, are single family homes an inflation hedge over a decade? And the challenge there is that as the price of homes go up, then there's an incentive for home builders to build more homes.
Real estate and investing into luxury watches has been argued by many to be one of the best forms of inflation hedge. In recent years, watches have become particularly popular with millennials, because when buying a home seems utterly out of reach, you can still reward yourself for a loved one with a nice luxury timepiece. The concept of investment watches is not new. Rolex sports watches, Audemars Piguet, notably the Royal Oak, and watches from Patek Philippe are known to hold or increase their value over time.
That's why a lot of people they actually prefer branded items controlled by monopolies. I think they probably almost believe that Ferrari and Rolex are more reliable. They'll keep the supply capped. Like, it's not likely that a random suburban ranch house in middle America will have a capped supply, because there's no single monopoly or brand organized or brand controller to keep that supply from getting out of control. So the general strategy when you're staring at inflation is, I want to acquire scarce desirable property that I can hold for a long period of time. If I'm going to hold it for a long period of time, that means I got to be able to afford to maintain it. So the maintenance cost on digital property is lower than the maintenance cost on physical property. The scarcity on a digital commodity, well, that's a function of the protocol and the integrity of the protocol. So if I create a product like Dogecoin and I know I'm going to print more Dogecoin every year, right? It's not quite 5% inflation a year, but it's an inflating supply. Well, then you don't have a hard cap. You've got an increasing supply. It'll continue to increase in supply forever. That's an uncertainty. If a small group of people can change the protocol, that's another uncertainty. The reason that we don't trust stocks as money over 100 years is because the board of directors and the CEO can change the supply of the stock. So Apple might be a good company, but if the CEO of Apple changes, the new CEO might double the supply of the stock. And so it doesn't necessarily make a good currency or a good money over the long term.
It's clear from Michael Saylor's explanation that the dollar is collapsing and only digital assets look attractive options at this stage. Why? Well, because of scarcity. The world economy is propped up by the US economy, but the US economy is a house built on a bad foundation. The US government collected $3.3 trillion in taxes last year, but spent $4.1 trillion, meaning it had to borrow $779 billion just to meet expenses. The Congressional Budget Office estimates that America will be spending more on interest than national defense within a decade. These statistics are hard to fathom, but banks keep lending America money because the dollar is the world's dominant reserve currency. Do you think Bitcoin is the solution to this economic downturn? Let us know in comments below. To watch the latest crypto news, watch these videos here.